Hello, my trading warrior brothers and sisters. How are you today? I'm doing all right. Jan, welcome. Hi, Alexander. Yeah, Euro's turning, EG's turning. Hi, Richard. Brock, how are you, buddy? Ryan, how's it going?
Morning, Dale. You all right?
Yeah, I'm good, man.
Yeah, good weekend?
Yeah, it was, nice weekend.
Out in the town, potting it up.
Huh?
Out on the town, cruising in the lowrider.
No, I stayed in town and just trying to find this. Where's my this be it? I don't know where to find it. Sure. Okay. So Ryan, EG.
Yes, mate.
Right to your price. Right to Stel's price. 82.
Yeah,
nice reversal.
Yeah. Is it me or is it a black screen?
Yeah, not seeing the screen, mate.
Yeah. Can you start sharing again? Yeah. Good morning.
Hi, how are you? Better?
Nope.
No?
Nope.
Huh. Maybe it's this one. Now?
Nope.
Oh my goodness. Now?
Monday morning gremlins. Yeah, there we go.
I didn't hit resume share. Okay. So, nice reversal day.
Yes.
Almost higher on the day.
Yeah, a bit of a mixed bounce.
I know this was the area you guys were looking for. So, still diverging.
Yeah. I didn't touch it.
Okay.
Late during Asia.
Okay.
I've actually just been stopped out on the short I took last week on the break of 70.
Okay.
The news, but yeah, we're just jumping on a few headlines again. Now it's decided to go the other way. So I'm not buying the narrative at the moment. Just let the market do its thing. Try and pick up the pieces.
I heard an interesting thing, and I don't know how you guys feel, but it's kind of nauseating trading around a war. I'd much rather be trading around economic policies and feds and numbers and what's happening over there is sickening. And but I did hear an analyst say that that long convoy that they have that hasn't moved.
Yeah,
that Putin's going to go along with a ceasefire just so he can reorganize his troops. The timing, I don't know. A ceasefire not because he wants the war to end, but so that he could make some corrections, military corrections, and then start up again. I mean, the world will hope it's a permanent ceasefire. But if that happens, you're going to see, a lot of fear come out of the market temporarily.
Yeah.
And, that even things like crude, which I know some guys that had 125 targets, and silver is, trying to hold, but it's diverging. And even, getting some buying in the euro, whether it's the bottom or not, I don't know. I think it could be. If you want to wait for confirmation, you wait until it gets back inside this formation. Back over, it would have to get back above 110.50. So that's still another 160 pips.
Yeah.
But I do believe that's an under-over bet that will get some type of rally before, even if we're going to take out 106. So, I don't know what the level is. Maybe we're 88. What's the biggest fib that you could have? 88.6, something like that. But this has been the weakness, and if EG is turning, that would be a good sign because cable still hasn't. Oh yeah, started taking out this low finally.
Yeah.
So thought we might trade at the big round number or shade under. Anyway, I think we're closer to, I have a hard time wanting to get bullish the dollar now. Did you guys see the DSI on euro?
No, where is it now?
I think
Is
it
it
was 6.
-2?
6, I think. 6. Yeah, so not too many people like it. And we'll see what happens. I'd like to see this gold silver ratio, because I'm talking my book, turn and head up one more time to above these highs. I think that will provide a pretty good buying opportunity in silver. I actually took a shot last night at 605 because I had this on the 15-minute. You know, I had this divergence here and looking for it to fill the gap, which it did. And I think it's on the verge of putting in an ugly day. So, well, not ugly, but, you know, nothing why not pull back, to the breakout or something? So, yeah, I'm not saying it's the end of any of these moves. It might be in crude. I don't know. Where are we going? 150? 175? What do you know?
Pick a number.
Yeah.
Well, Blake interviewed Shy Girl, so he knows where it's going. And, S&P's held in between the 50 and 61.8 back here. This could still just be a pullback and attack this wedge line again. The only other thing I think of from here is that we, puke one more time down here. But it is a falling wedge. And where's the breakout? 44.5 or so, 44.50. So above last week's highs. I don't think I'd want to fight it. I know a lot of people want to sell it, maybe up here 5.5 or 6, but all last week when you had massive geo events happening, a hot war in Europe and talk of nukes and everything, that's respectable to me.
It's pretty stable, isn't it?
Yeah, notice that last week.
Yeah, I think it's a case of geolocation. It's far, despite US being in the mix, it's far away from the situation.
Yeah.
That's where you're going to put your money away from the situation. So you're certainly not going to put your money in Europe at the moment.
Yeah, and we'll know that changes when the euro's back over 110.50.
Yeah, and meanwhile,
so, I mean, there's excuse me.
I was going to say, just right now, it can't even stay above 109.
Yeah,
even in this risk bounce just now.
So I mean, you could just do nothing and not try and bottom pick it and just wait on the euro.
Yeah.
To get, because this line was valid, for some trades. You had this one here, and on this bounce, a lot of people thought the dollar had peaked, right? That was the end of the dollar. And this time, this is a throwover. So throwovers make you throw up. If you're trying to play wedge lines, you have to always take that into consideration. You try the line, but then once it becomes a throwover, you get out of the way. Yeah. And you could probably use some shorter term timing if you want to get into the market before this happens. But, if you're a confirmation player like Steve Volge, he would wait for a candle to finish back inside this formation. And then you have, a lot of people stuck the wrong way. So just, take a picture of that line. It's that weekly line, monthly line, and we have a throwover there. Back inside this, it makes maybe this is the wedge. So we have a wedge in the S&Ps, and it looks like we have a wedge in the euro too. So,
and we've got that 110 level as the first important step.
Yeah,
that line.
Yeah, so that you could almost, like, if you're looking for a euro bottom, just take a vacation and wait for closes back over 110 and then get back into the game. Because, part of the scenario, I know there are some people that are looking for 110 in the dollar and 120. Part of the mix of, I look at the screen and I bet Stelios remembers. Remember a book called Crisis Investing by Doug Casey?
Yep.
Long time, it's 70s, right?
Yeah. Very old one. Yeah.
Yeah. So, I mean, that's the board we're looking at here.
Indeed.
So, but there could be respites. Fundamentally, it could be a temporary ceasefire. It makes sense.
I got your respite.
You got it?
I got your respite. I'll give you a respite.
Okay, I like it. A respite for breakfast?
A respite for breakfast? Nice.
What is the respite? Is this American language again? Is it?
Yeah, it's who in the hell? Somebody popularized that word, and I think it was President Bush Jr. I think he said it. I'm sorry.
Do you mean respite? Respite.
Yeah, but he called it respite, and I think the rest of the world started saying respite.
You
the decider, right?
It's so funny. I think he made up a lot of words actually. So Texas accent. Brand says Texas. I mean, I think at the time I was living in Texas.
Yeah, you sure lost your Texas accent.
So how you guys doing today?
Very well. Actually, guys, there's so much happening. I have to point out one thing. Bran watched the week ahead video. Well done.
What? Good for him, man. That's
great.
Well, let's talk about. You guys were mentioning crude, and I did talk to Tracy from Shy Girl from our last week, and we were talking about crude hitting 120. Obviously, we gapped above that, but you can see, this is weekly resistance up here, previous support, current resistance, and we're obviously very stretched, no matter what metrics you're looking at, and almost everything we're looking at, and the euro. I mean. And I got to point this out. We talked about this on the week ahead video. Brand, congratulations for watching for the very first time. I don't know where you've been for the last few years, but anyway, weekly candle. We got to watch it this week. I mean, we've probed below it, but everything. It's interesting, these headlines, and I don't know if you guys talked about the headlines that were the Reuters article. I'm sorry that came out earlier. Did you guys mention that?
No.
About Russia making demands of Ukraine?
Yeah, no, we're going to mention that.
Yeah. Oh, you're going to mention. Okay. Well, we're seeing a big bounce. We'll talk about that here in just a second. The euro's making a big bounce, and I would argue that this is pretty key. I mean, I showed you guys the 6E, the euro futures over the weekend, and I showed you how important that support was, right? This is what I was writing. Now, remember, we're on a weekly chart, so where we end by the end of the week is going to be pretty important here. I argued that this is just really big support. This was more clickbait. that little thing right there, that was more for just to get people's attention. But obviously, I was talking about the euro and how important this level is. But the fact of the matter is this is really key. I mean, any which way you want to slice it, where we're at is important, and we're seeing a reversal today. Now, the headlines that came out, or Reuters article that came out, basically says Russia's making these demands of Ukraine. If they meet those demands, this could be over very quickly, and the market took that as a cue. That's great. Right.
Falsely.
Now, but we'll talk. We're going to talk about and matter of fact, I should probably pull up that article here in a second, and then we can talk about some of the specifics. But I do want to talk about really fast. I just got to point out gold, because gold, has rallied pretty sharply. You can see this triangle that was developing last week. We finally broke it, and it took us to 2,000. But what's really been interesting over the last, since we kind of, got there. We haven't been able to really get past 2,000. I mean, we were slightly beyond it, but really we're just now stalling. So watch gold. Gold is, and you can see I have an alarm set up here. Really, if gold breaks back below 1975, well, first of all, that's going to signal a whole lot of stuff. Like A, you don't want to be long gold, but B, whatever you've seen moving in whatever direction, so it's, the Aussie's been moving higher. If gold breaks lower, I think the Aussie is going to actually break lower. So will the Kiwi. You'll probably see the euro continue to stabilize. You might see Bitcoin and other cryptocurrencies continue to rally. Gold will go down because yields are going up, but yields are going up, so the dollar yen's probably going up, and the euro yen's probably recovering. So all these recovery trades, I'm looking for different clues to tell me that this is going to continue. And one of them is going to be just watching gold here. And one last point I want to make here is we've seen everything really get stretched just because the euro bounces and, let's just say goes from, 109 and back to 111 or, 110.50 or something like that. That doesn't mean that the European, like its woes are over or anything like that. But I think there's risk that we can see some sort of recovery trade in some of these, some of these markets. And remember, the euro just got absolutely destroyed, and so to have it bounce back a little bit makes perfect sense to me. Is it going to be a full-on reversal? Is the euro going to 120 from these levels? That's to be seen. But anyway, did you guys? I wanted to hear your comments about the headlines that came out earlier.
Well, as soon as they came out, I had a look at them, and my thought was, these are the same demands they made at the start. They could have stopped after they took those two regions and made the demands from there onwards, but they didn't. They kept going. There's no what the markets do with it. Market's going to do what the market's going to do. Is it a change in sentiment?
No. Is it looking for reasons to recover, right?
Yeah. It shows the scale of what may happen, at least a small scale of what may happen if there's a proper headline of the end of hostilities. It's going to, everything's going to rip. Risky is going to rip. This is just small beans. 125 pips, 150 pips in something like euro yen, just on some flaky headlines. You imagine if there was a proper ceasefire headline. You don't want to be standing in the way. If you're on something, you ride that rocket all the way as far as it goes.
Yeah. So, Stelios,
I was going to say basically what the market read in terms of the headlines and liked is exactly what we knew before. So they say that Ukraine must amend the constitution and not enter the NATO and stuff like that. Also, they must recognize Crimea as being Russian and Donetsk and Lugansk, however you say those, as independent states. This is what they looked for from the beginning. And, if you look at what the Ukrainians are saying is like, would rather die than do that. So I don't see this as being much of a progress made, but it does give us a target, at least. I think that's what the market probably likes. Yeah. But it's not like we have something new or, oh my God, this is a huge step backwards for the Russians. It's pretty much what they said from the beginning, I think, unless I'm mistaken.
I think he wants a ceasefire.
He probably does.
Temporarily.
Stelios is a warmonger. Oh, I'm sorry. That slept out. I'm sorry. What were you saying?
That 4-mile column can't move. He wants a ceasefire. They could take him out, that convoy that's stuck in the mud. So I think he's the one that really wants it, and not for the end of the war, just to, realign, reposition, handle logistics, and start up again.
Brock said they did not require change in leadership this time. Oh, there you go.
Well,
okay, good point, actually.
Yeah, it is. So hey, let's just assume at some point that we get this ceasefire, right? Let's just assume that. What do you think is going to happen with equities? We get some sort of ceasefire, like a de-escalation. Doesn't mean it's over. Let's talk near term. What do you think happens to stocks?
European stocks rally, obviously.
Good point. Yeah. DAX has absolutely gotten smashed, and we're at the 78% retracement, by the way, if you haven't seen it, of the 2020 October 2020 low to the high. 78% retrace it, pinged it to the pip almost, and then we're seeing a big reversal. So okay, European equities go up. What do S&Ps do?
US equities probably rally in sync.
Gold's crapping the bed, by the way. It's breaking down. So I'm sorry. Go ahead.
Yeah, they probably rally too in alongside the general risk picture.
Okay. So stocks will go up. Now, let me ask you guys this. Here's a trick question. What do yields do?
Rally.
They rally?
Yeah.
Okay. So they rally, and let's say the 10-year yield, actually pivots exactly where it should, right? Triangle breakout, hit the triangle breakout, and here we go bouncing. I agree with everything that you're saying. But I will say this, but when the 10-year bond market either tests or hits new lows, that's going to be the day the stock market says, holy crap, did you guys see yields? You know what I mean? So I think that is where we have to be really, really careful with the markets, is when yields hit, like you take the 10 or 30, well, here's like the 10-year, reaches back above 2%, 30 years starts making a new trend high. That's when you start worrying about stocks. So anyway,
by the way,
that's just my opinion.
Sorry to interrupt. The reason why things are moving now is Germany just said they have no current plans to halt Russian energy imports.
Whoa.
Schultz just said that.
Schultz. I love Schultz.
So they want to, yeah.
Schultz, you are the man bomb.
Meanwhile,
Shell was in Hogan's Heroes.
TJ says Schultz. Yes, he is right. Schultz. Oh, what's that? I'm sorry.
Wasn't he in Hogan's Heroes?
Yeah. Do you know Hot Lips Houlihan passed away recently?
That was
a shame. I'm sorry. I totally went off base there. So what were you saying, Ryan?
Sorry, just there's another headline popped up that Shell is limiting supplies of heating oil in Germany. So it's something for you inflation watchers.
Oh man, inflation. So speaking of inflation, so we have CPI this week. What do you guys make of CPI? What's it going to come in at?
Does it matter?
It doesn't matter.
I think it's gonna have to beat expectations, right? With oil going. Actually, no. It's CPI for which month? For February.
Yeah, that's
February. People are assuming it's going to reach 8%. Is that what the consensus is right now?
Yeah, I don't know.
I mean, that's gonna be and I just heard Steve pop in here. So Steve says it doesn't matter. You don't think inflation matters?
Inflation reading of the month is going to be completely irrelevant.
Why is it going to be irrelevant? That's what was on everybody's mind. It might be irrelevant on your mind, in your mind.
Okay, at what number is it relevant?
Well, I mean, do you think? Well, I'd actually think if the number comes in a little cooler, it would.
If the number comes a little bit cooler, we should ignore the fact that within the days that followed, there are things that have almost doubled in price, which is going to show up in the next month. So let's assume we see a little bit of a cooler number. Should we assume that next month is going to be better? No, it's going to be horrifically worse.
Steve, your expectations versus what the market is expecting are two totally irrelevant things. That's like when, the markets were ripping higher for the last few years and we would say, God, that doesn't make any sense. The market doesn't care. The market's going to continue to rip higher.
What I'm saying is that exactly this. The market knows that next month inflation is going to shoot higher, irrespective of what happens this month.
Right, Steve. So if it comes in weaker, what do? The market's going to care. At that moment, it's going to care. So what do? I
don't think it will. That's
my fade point. You fade it, right?
I don't think the market is going to react to a lower number because of the reason I just mentioned. So I don't think there's going to be much.
How about if it does?
If it does, yes.
You fade it, of course.
In general,
there you go.
You fade. In general, you fade anything that acts like inflation is not an issue, and that's not something that we should start focusing on today. I mean, it's been an ongoing theme for a year now, right? And I think now with the war on top of everything, let
me ask you this then: if the number comes in weak, right? Because this is a not theoretical webinar that we have here. This is a webinar about how we make money. with data that comes out and, you know,
Mhm.
all the information that we have in front of us. So let's say there's some sort of, you know, the markets are rallying on hopes that there's going to be some sort of de-escalation and the market's ripping. Then you get an inflation print that's actually a little weaker than expected.
Mhm.
So then the stock market actually rallies even further on that. Do you fade it because inflation doesn't matter and we got to expect higher inflation now? So is that what we do?
In my opinion, you fade anything that, you know, is based on hopes that growth and inflation are going to do better, and by better inflation meaning lower, of course, right? And by better growth meaning higher, of course, right?
But the market's really short-sighted. So the reason why I say that is because I understand what you're saying. I get what you're saying, but the point I'm trying to make here is the markets are going to see that short term because they have ADHD. They do. And so you let the markets play out, but then you ultimately, I mean, I look at the S&P, like inflation is going to be high, persistent for a long period of time. And yes, even if the reading from February is a little bit better than expected, we know that it's going to be probably relatively hot right now. So when you take that into account, I look at the stock market and I'm like, let's let it recover. Let's let it route. You know, if the S&P gave me another look at 4,600, I would short the living piss out of this market right here. I mean, I would just please recover up to there.
You won't get that off this CPI report. You're not going to get that off this CPI report. You have to look at it. You won't get that off this CPI report.
No, of course. I mean, but
About
we
45.
but we have to talk about what the option or what the potentials are over the course of the next couple of days, so we can trade around that, right?
But I think it's small because everything else is going on. Just like the NFP. What's the NFP now? Nothing. No one gives a monkeys about what happened at the NFP except that it wasn't crap.
I care. You call me a monkey?
Look at the CPI in terms of the Fed. Where are the Fed now? The Fed are at the moment, the market's saying 25 pips. You know, 50 is potentially pretty much ruled out because of everything going on. So is the CPI going to stop them from going 25, or is it going to push up expectations for a 50?
Well, okay, let's say, okay, that makes a great point, Ryan. So let me ask you this, smart guy. So let's say CPI data comes in hot tomorrow. Comes in hot. Everybody's like, holy crap. But between today and tomorrow, we get like a ceasefire. So now you're the Fed, you got a hot print, you know that inflation's running hot. There was a home down the street from my house that went, and I'm just going to give you percentages here. It went 7% over asking price in a bidding war in a place that we're going to run out of water within 10 years. And then it's, you know, everybody's going to die here where I live. So it's the craziest thing, right? So you got all these inflationary pressures that are just ripping all over the place. And, you know, you get a ceasefire. So what's the Fed going to do? Are they going to go 50?
Probably not.
You don't think so?
No, it's hard to tell. You know, what is in a ceasefire? You know, if it's we are ceasefire
and means they stop shooting bullets.
Yeah, are we turning around our trucks and going back to Russia?
Well, they can't because they're stuck on the road.
No chance of that happening.
No, they can't, Steve. They're stuck on the road. They can't even turn around.
Yeah, I mean,
they're physically stuck. So
what type of ceasefire?
What Ryan means, and I agree with him, is that for the time being, there is no chance. There's no chance of any type of ceasefire other than let's stop for 2 days, act like we're negotiating, and then go back to what we were doing.
But okay,
not yet, at least.
Well, let's say we could stretch that out for 2 weeks. All right. So, you know, because we have CPI this week. What day is the Fed meeting? Right off the top of your head, I think it's 15th.
15, 16, I think.
Yeah. So, okay. So let's say we could do a ceasefire for 2 weeks, right? And that means the ceasefire is going on between, let's just say tomorrow or Wednesday, or, you know, pre-CPI data. So we got hot data. Ceasefire is happening, and let's just say theoretically we can make the ceasefire go for you know, up until the Fed meeting, and the Federal Reserve is now faced with, you know, stronger CPI, stocks are bounced, you know, everybody's kind of like calm, and do they go 50? I think they do. I personally think they do.
I wish you're right. Although, as I've said before, unfortunately, it's only going to make a difference having to do with posture and future intentions, which for the markets is going to be important. Unfortunately, it's not going to make a real difference to the actual data, to inflation, because we are too far gone for 25 basis points or 50 basis points to actually tame or make a difference to the path that inflation has taken. It will make a difference, though, to the perception of the markets of what's coming ahead. And I do think that if they go 50, that's going to scare the US stock markets especially significantly.
Well, yeah, let's you know what, we're going to have to leave it at that. And because I just realized it is time for Dale's interview. But before I let you guys go, I want to say great conversation this morning, guys. Everybody out there, if you have not tried out ForexAnalytix, remember it's $1 for 10 days. Make sure you visit our webinar sponsor. Just, you know, one of the reasons why this webinar is free is because it is brought to you by, where in the hell is, oh, here it is. It's brought to you by Forest Park FX. Make sure you visit them. Great company. We've been working with them for what, 5-6 years now. If you guys do not get cashback rebates, make sure you visit them. Also, check out the trader funding program. We actually had some people over the weekend. They were like, you know what? I can trade and I can meet whatever assessment that you have. I'm taking you on. So if you guys want to try to access more amounts of money, you know, just click here and you can watch the video down at the bottom of this, right at the very bottom. But you can access these dollar amounts if you do an assessment, and the assessment is a one-time fee and it's not very much. And we already have multiple people that are in 2 weeks have accessed larger accounts and are trading live. So, you know, it's just an opportunity for you guys. So thanks everybody for joining in. Steve, Ryan, we didn't have K-Man today. He's dealing with some personal stuff. Gold's crapping the bad guys. You got to pay attention to that.
Great call, Blake.
Thank you. And Stelios.
Silver short wasn't bad.
Warmongering Stelios. I like it. I love poking Stelios.
Yeah,
it's like
he's the real warmonger type of guy.
The ancient Greeks, they were great warriors. Unless they were from Athens, I think. They were more like the fine arts, and they were the pussies. They didn't fight.
Did you just use the P word? This is a family show, Dale.
Okay. Athens had a strong military.
All right, guys. Have a great one. Dale, thanks for everything. Thanks for always being a great host and team member. And you guys
referee.
Have a great...
Hey, Christopher, welcome back to F.A.C.E. How are you, buddy? Christopher Inks, I'm asking you to unmute.
Yeah, there we go. I was trying to get that
Chris.
done.
Hey, it's been a long time.
Yes, sir. Man, a lot of stuff's happened since the last time we talked. How you doing?
I'm doing good. What's on your radar, and how's the war?
Oh, man.
Treating you?
I'll tell you, I'm doing all right. Nothing really coming in that we didn't kind of, expect really. I don't know. Can y'all see the charts here?
Yeah, we have Bitcoin here.
Okay, yeah. So, again, something I've tried to explain before. I'm not a believer in this idea that the charts kind of tell you what everybody's going to do. I think in the respect that people react off the charts other than a knee-jerk reaction, right? So, my belief, is this idea that social mood and the way it happens is reflected in the charts. And so, I think most analysts end up asking questions backwards, because it's that social mood that leads to what's happening. So if we talk about the war and what's going on with Russia and Ukraine, you look at the fact that Russia, its stock market hadn't been doing all that great. And, so, when the stock market's doing poorly for a long time, social mood is down, and that usually will lead to war, Okay. And so we get that. So, really what's happened here, in that respect really isn't surprising at all. Gold and silver popped up a bit higher than I thought they would. Oil
Still
always had that
bearish long term
possibility.
on those, Chris?
Excuse me?
You still bearish precious metals long term?
I am. Now there's a possibility that, maybe this year-long range that we've been in. Let me kind of pull up one real quick here.
All right, let me look at, I want to talk to you about Bitcoin though, before you
Okay,
leave.
all right.
All right, so it could have been a seminal moment in the market by seeing what sanctions can do to be able to freeze assets anywhere, even a central bank.
Yeah.
I don't know if the U.S. government or any government has the ability to freeze Bitcoin accounts. So a lot of people are saying this is really another reason for going to Bitcoin and going to crypto. And one of maybe I shouldn't say it, it's a family show, but the lead singer from Pussy Riot, who was jailed by Putin, and she has a fund, and they're funding it with crypto rather than currency because they don't want to have it seized. If we could do it, maybe Russia could do it. So is this a real seminal moment for Bitcoin where people won't trust the banking system because of how assets were frozen?
I'd like to believe that. I don't, I'm not a big fan of, centralized government and whatnot, just because, it's going to lead to what it leads to, historically, always, every government fails and, it all follows the same path generally. So central banks and banking in general becomes, the main force through which, this usually ends up happening. But honestly, I think most people really don't care. Especially here in the U.S., people here in the U.S. were so removed from the rest of the world. We think the world revolves around us, and I think people want to believe, that the government's going to do this and that for them, and so they just kind of turn a blind eye. And I don't really think it's going to have that kind of effect there. Now, the thing is, can they freeze your wallets? If you're holding them yourself on like a Ledger or a Nano or something like that, no, they can't freeze your wallet. But what can they do? Well, you've got people like Coinbase and all these other, Kraken, all these other on and off ramps, and they can, remove your ability to get your crypto off there. They can make it painful for anybody to deal with you outside of the, the exchanges and whatnot.
I see.
So I don't know that it's really, all this great savior that everybody seems to think it is. I've been believing for a while now that we might have talked about it before, that Bitcoin actually and cryptos actually make it easier for government to track you, make it easier for government to kind of keep that control that they need over you. So
that's why they want to develop their own, right?
Yeah. That was always the thing. The central banks coming out with their own and whatnot. Everybody's like, oh, Bitcoin's going to be everybody's going to take on Bitcoin. It's going to be the reserve currency of the world and stuff like that. But in order for that to happen, governments would have to give up power, and they're not going to do that. That isn't the nature of power. So,
okay. So you have like a range going here in Bitcoin, A, B, C, D, E, and after E, you're looking for 61,000 or 100 grand. Where is that? That purple line, that arrow. Yeah.
So basically, there's a couple of ideas here. One is that maybe Bitcoin was done with this wave 4 down over here, and this is wave 1 of 5, wave 2 pullback. Other idea, maybe there's a sort of flat going on here, so 4 is here. And the other one, of course, is this triangle idea, which says, okay, well, we've got to get 3 more up for D, 3 more down for E, and then we get up. And so this just becomes a pattern target based on the height of the triangle pattern here.
Okay.
But if it comes to fruition that we're going to head up higher here, Bitcoin historically every time has got some sort of blow off top. So, I could see it definitely extending well beyond that.
Okay. All right. So I do remember you were bullish once Dixie got over 91. If you want to go to the precious metals first, Chris, we could do that.
Yeah. Let me see here. Let's see here. So let me jump in silver here first. So I've got this. Let me kind of zoom out here a bit. along with the, gold, everybody hates me because of my gold, my silver looks here, but, it's the idea that we've got within an ABC, we've got B up here, we've got C coming down. So now within C, we need 5 waves. So we've got a 1 here as a leading diagonal. We've got an ABC as a flat for wave 2, which, if you look here, it's just right here above that R1 pivot right here at this high volume node on the daily.
Yeah.
So, everything else aside, just coming in sideways between the pivot and the R1, usually we expect a rejection of the R1 and a retest of the pivot. And if you lose that pivot, you got one more chance at the S1. If you lose that in this particular type of scenario, just playing pivots, usually it means you run down.
Yeah.
But I've got
How
this
about
here.
to your support 2 level?
Yeah. So
Based
you
on
just
any-
break on down and you run on down at least to the S3, usually the S5.
Oh, really? Okay.
Yeah. If you're trading pivots, and so if we look at this as the count, which it seems to be so far, again, only hitting the 61.8 retracement. That's all we've done. Everybody getting real excited about this sudden thrust here. And so we get that breakdown and come on down. And, that ends up getting us down here from where we're at. 5 waves down gets us around $8.
Wow.
Yeah.
I was thinking it'd be a great buying opportunity if they ever flush the 2130 bulls, at 19 or so, like a bear trap.
See, and that's that whole thing. That's that whole area there. And but once you're getting down below there, I think you really just open it up for that move down.
Okay.
And so and that kind
I
of
did
goes-
notice, Chris, the silver shares way underperformed the gold shares,
Yes.
the miners.
Yeah.
Okay.
Oh, go ahead.
No, go ahead.
Oh no, I was just gonna say, there's been, I think for people just in general, this last year, 2 years or so, I think it's really, everything's going on is really just flipping people around because things they thought that would happen in a certain way have proven that it doesn't really. It's like, the Fed used to think that, there was a certain correlation with unemployment and interest rates. And, they found out, hey, coming into 2020, 2021, and they found out that isn't true, right? So, decades of policy that they use based on that no longer works, right? And so we get into the market here where everybody kind of believes that, that gold's supposed to, and I think a lot of that is that, this idea that gold's some kind of safe haven. Again, I've said this before, I don't believe that. I think gold is just a tradable asset like anything else. And so, because here's the thing, you've been printing all this money more recently here since since March of 2020.
Yeah, and we're not over 2100. Is that your point?
Yeah. We had that. And so let me see here. Where's that? March of 2020. That's way over here.
Yeah. You sell silver up.
Oh God, what is it? Right in this area here. And of course, gold and everything went down and then it rallied up here. And we're kind of just at that same area we were, 2011, that all-time high kind of area, not doing anything at the moment. So now there's always the possibility that this count is wrong, that is a bit more bullish, in which case, with silver and gold, you're going to have that higher. I can't say it definitely is going to go down lower, but the reality of it is for right now, we've only retraced 61.8 and, that's Fibonacci, golden zone right there.
Yeah. And you have 90% bulls now. So at the minimum, a pullback, recovery,
at least
a sell-off, a correction from
at least. I think you start looking lower, when you're dropping down, when you're kind of getting down here toward these lows down here, that 22 area, 21.5. I think if you're losing that, especially if you're losing it impulsively, you're getting some large candle spreads, some expanding volume. I think then you get worried that maybe that top, really might be up there and we are headed down toward that potentially $8 area. But until it does anything different, I mean, there's no reason for me to change what I'm looking at. It all fits very easily. So, I continue to look at it this way.
And the gold?
And so gold, again, same kind of idea here, though it did rally more. But, right here, just 78.6 is where we're at. Again, same idea. You've got this leading diagonal coming in 1. You've got a flat correction coming in 2. And you head on down there. Again, and this is the idea that we've got this huge flag going on, this being wave B up here, and this being 1, 2 of C. So, you're heading down 5 waves down in C. So you're potentially looking at $1,000.
Wow.
I mean, this candle looks awful today right here.
Yeah. Yeah. I think, Yeah, so great day to have you on. The dollar too, euro taking it on the chin.
Mhm.
I forgot what your dollar target was. Are you in the plus 100 camp
Oh
from a
yeah,
long time ago?
yeah,
You're
yeah.
like 110.
Yeah, and potentially even higher. Yeah, again,
Yeah.
this is something that I've been talking to you about, for a while there, and so if we get this here, I mean, this was the lowdown here. This was the beginning of that
Right.
first week in 2021.
Right.
And I made my case for the idea that the bottom may be in here, including things like, usually the currency is going to reverse at the beginning of the year
Yeah.
and whatnot. Got a lot of flack, a lot of fighting about it. And here we are, way up here.
Now you have a lot of company.
Yeah, but then that becomes worrisome, when everybody starts agreeing, all of a sudden it's like, well, okay, are we ready for some kind of pullback?
Well, I know this is a bit above 61.8 to after Friday's action.
Mhm.
Like the same comparison you made in silver.
Right.
I don't know if
right.
it got to 78.6, but why can't this be like the silver chart? What's the difference between this retracement that we're looking at here in the dollar and the retracement we're getting in silver?
Well, if we zoom on out here, let me zoom out here a little bit. You know what? Let me stick with that daily there. I've got a larger count here. There we go. That's what I'm going. It's on the monthly here. So this is kind of what I'm looking at coming off these lows back here in April of 08. So back there during the GFC.
Yeah.
And so I've got this just as a 3-4 here. We still got a wave 5 to go. And of that, we've got a 1 with a flat correction and a 2. And so here we're coming up. And so, if we're breaking out above here, that says we've got 1, 2, 3 heading up. And so that gives us a 5 up here around 114.75. But I think if we're looking at the really interesting thing on that is, you've got this nice clean channel here. That takes us out of that channell.
Yeah.
And so the scary thing I think about that is
that's a 25, 35, 30-point channel or something like that.
50.
50. Okay.
Yeah.
Takes you to 150.
Yeah. If it follows that pattern target exactly. So, I think,
Wow.
you still got to look for the breakout. I think really kind of above this swing high over here in July of 01. But breaking out of that descending resistance there, I think is really should have people's attention if that is to happen.
Okay.
Yeah.
Interesting.
So you get your 1, 2 and head on up.
So the stock market rolled over, Chris, and the debate is on the invasion day, the S&P's reversed, and they've really held up well amidst parabolic move in crude, etc. So could that low have been the completion of 4 and we still have a 5 to go to the upside in S&Ps?
Oh man, it could be. I think it's the chart
I
right
could
here.
tell
Yeah.
by your old man that you don't think so.
Well, no. I mean, it's possible. It hasn't come down enough. It hasn't give you that larger count, confirmation
Flush.
that you look for yet.
Yeah.
I
So you
think
have it as a 4 there.
Well, no, this is that in case it's going to go up one more. This is kind of like that alternate count.
All right.
Because you asked about that, right? And so,
yeah.
I think, when you look at the fact that we've kind of moved in here again sideways between that pivot and that R1, this is on the weekly here, and we found support at that pivot. I think you have to keep an open mind to a potential, one more wave up.
Yeah.
So, if we get that breakout there, then, I think we're looking at that R1 pivot area.
Okay.
Now that doesn't have to happen, but
let's see your first count. This is your alternate.
Say that again.
This is your alternate. What's your preferred?
Yeah. Well, the preferred is over here, and this says, okay, well, we topped out back over here. Let's see, up over here in the beginning of January.
Yeah.
Get out of the way there, up there, and so from here, I've got a 1, 2, and then a 1, 2 here. And so, for right now, we've got this like a leading diagonal here, and then we've got 1 of 3 starting here. We're rallied up to the 70.5 in 3 waves. So you got A, B, C potentially. So, I mean, unless we break out above this 43.37 up here, I think we kind of come down. Now, again, we're bouncing off the S1. So if we break out above that pivot, that should be most likely good to go and head up. And again, I think we'll start looking at that other count potentially. But if we get reject this pivot and we come all back down, I think there's a real good chance that tops in.
Okay. Oil. Did that
Oil,
surprise
man,
you?
everybody loving oil right now, right? Unless you're trying
Yeah.
to drive.
So
anywhere.
I know you're looking for a top here. Says 5.
Yeah.
Was this 5 today?
I think so. I think it might be. So we've got these marks here, these significant levels that I'm looking for to break through to gain more and more confidence. But again, like gold there, absolutely ugly candle right here. In terms of pivots, again, pivots was something. See, the reason I keep talking about pivots is something I did for just a few years on its own. And so things I've learned is if you come in sideways between the pivot and the R1 right here, and you don't get the rejection and that retest the pivot, you just fire on up to the R2 or R3. Usually it means you're going to run to R5, and then that'll be the end of it. It's usually a pretty bullish last move. And so here we are, basically have done that, right? We came right in, run up the R2, kind of sideways, R3 back, and then just boom, popped up to R5. So I think there's a good chance that top may be in there. And here's the thing, if it is, I mean, some people are kind of, this and that about it, but I mean, man, we've been rallying since that negative print in May of 2020.
Yeah.
I mean, that's a few years, man. You got to pull back at some point.
But you know what? It does give you support for your deflation idea because of how it's such a huge tax on everybody right
exactly.
now.
Yeah, exactly.
Draining liquidity away.
Right.
So, unless there's, a nuke or something, it's sure a tough short. I use ETFs when I try and do this, so I don't get blown out overnight, but it's a tough trade. Anything else on that you're looking at that you'd like to share with us?
Well,
Chris?
I'll tell you what, so I watch, one of my favorite charts is the Tlt Junk Chart.
Okay.
And so where you got those long-term government securities paired up against your corporate bonds there.
Oh, corporate.
And
you mean junk like HYG? Only
your corporate debt, your junk.
Okay.
Junk bonds.
LQD is corporate.
Right.
Okay.
So
all right.
What we look for with this is the idea generally being that if we're rallying, it's a risk off market because people are going from J&K to TLT, right? So they're going for that short term,
higher yields.
More risky debt. You're going or the bonds there to the long-term safe government kind of stuff.
Right.
And so, you had that run up here. This was that when the markets were all dropping down into March of 2020, and you can see how we ran up here. Everybody was scared. Everybody went in that long-term, right?
Right.
And then after that, we end up, recovering off that. And so your S&P and everything kind of goes up, and you see that movement from TLT back to that riskier junk, right?
Yeah.
But that creates this wedge here. We find this support right on this support resistance area right here. And we've just kind of continued moving up since then. You can see that we caught a lot of volume at the bottom in this area here, showing us that demand has really showed up here. And, it did flip the script there. And so with here, I've got this rallying up here on this wave circle 3 up here at around 1.63. And again, if this is going up, that in general means that people are more fearful and they're not going to be putting a ton of money comparatively, back into the stock market. So if this is playing out, then, again, the whole idea that we're probably topped out, I think makes a lot of sense.
Okay. That's interesting.
Yeah.
Over junk. So. Okay. So those, I know a lot of people look at those yield spreads between junk and, to get an idea of risk and systemic risk and things like that. That's a very interesting chart. So tell me what's new at Texas West Capital. I know you probably have about 1 million projects since I last talked to you.
Man, it's always something. We got a few things in the works right now that we're hoping to be releasing here in the next few months. Just other than that, I mean, really just trying to keep everybody from from
freaking
jumping
out
into that emotional train as they're trading the charts,
Yeah. Well, I tell you what, it was really great to see your charts. I missed them. So, really appreciate you taking the time. You could follow Chris at TX West Capital. And is
Yes.
that also the name of the website would be TexasWestCapital.com?
TexasWestCapital.com.
Any newsletter or where people could try you out?
Yeah, as a matter of fact, I do. If people
Why don't you
follow
show
me
your
there on
website?
Twitter, I've got it
You could
loaded
do
up
that.
there.
Okay.
We're going to relaunch that here in the next few weeks, and so and that's really just a lot more of the macro explanation of what's going on, macroeconomics, global financial policy, stuff like that, helping people just kind of get on board with it. Because a lot of people are coming in today, real interested in the markets, and they have no real clue what these other things mean. So hopefully just to help them get a grasp of what's going on out there.
Yeah. Don't tell them not to trade live if they're starting
Say that
for a
again?
while. Anyway, these. Okay, I want to wrap it with this. Do you have more of a propensity since the war started to take winners off earlier? Are you finding it more difficult to hold positions?
Well, I'll tell you what, I've always been a big believer in consistently locking in profits. Otherwise you're just kind of emotional and you're like, oh, it's going to go higher. It's going to go higher. And it rarely does. Right. So I've always been on that boat anyway.
Okay.
I don't know that I'm necessarily more so now, but I would definitely, suggest anybody's in there that's what it is. Let time and compounding do the rest. Right.
That's it. Christopher Inks, everybody.
I appreciate you, Dale.
Master Elliott Wave artist. Great to have you, Chris.
Thanks, Dale.
We'll keep you in the rotation, buddy. Good hunting, and I'm rooting for you and all your people.
I appreciate it, buddy.
Okay. So that's a wrap, everyone. I'll see you for Turnaround Tuesday, and you could join the crew on the Morning Edge in 19 minutes. Don't just count your pips, count your blessings. See everyone tomorrow. See you, Alexander. Thanks again, Chris.
Thanks, Dale.